Breakfast Club. My name is Darren Hancock, and here we are on Tuesday, the 22nd of July, 2025. What are we looking at today? As Hadi has pointed out as well on the 15-minute chart, we're looking for a box-to-box trade, looking for this 353 to 356 on the upside. So these two little lines here, I had them marked way back in here. Where they put, oh, they're over here. But looking up in here on a 1-minute chart, up there puts us right up into the mean threshold of this 15-minute candle. There's a premium box just above us. I'll remove that. But in order to get that objective up there, we need to clear this level, which is pretty much going to hit us there anyway. So we could be a quick run up, do a stop run above this, the relative equal highs here on the 15-minute, and then roll over and come back down. We want to see, now that we've traded above this, I want to see it come back down and tap this area here, and then continue going higher. But you got to be careful. This isn't one of your bull traps, right? We're right at the mean threshold of this candle. I'm right at Monday's 15-minute first fair value gap in, on the 15-minute in on Monday. So mean threshold, we've got some sensitivity happening there right now. So we need to close above that, come back into it, and then continue pushing for this upper box above us at 356-ish. This could be a bear trap or a bull trap though, so be careful because you're right at the very premium portion of that range and right off of a very important confluence levels. So you want to see it come back, find some support in here and start to accelerate through here. And hopefully take this out so we continue finishing through the rest of that Sunday or Monday's initial presentation fair value gap, or first presentation fair value gap for the 15-minute. I know Michael only does 15-second to 1 minute or 5-minute, but you can find them on all your time frames. If it's a fractal thing, you should be able to find it throughout. All right, let's kind of go through where we're sitting here. Let me see what the hourly is. Hourly still got a lot of upside too. 317. We can get back to 317. $316. This is going to be a level of curiosity for me about here. I want to put this as a area of interest for me. All the way to there. That's what that's going to be. I'd like to see us dip back down into here and use that level anywhere inside that level all the way up to, well, I guess it would be here. There. Okay, just making sure we're live here, and we are. Skip that. All right, we're in. So, high taken, change in direction, changing the state of delivery. We're back up inside this level, and now we're rolling over, looking for this level to get closed below. We get a little market structure shift here. Then I'm looking for a run back into this level. I don't want to see it come all the way back down into here, but we could get a spike down into there. Just to return to these old highs here would be great. I'm going to make sure I got my audio on. Yes, it is. Audio's on. So looking for lower prices right now. We've got the change in direction. Just looking for a market structure shift to follow through with that. To come lower. Now, if you're trading inside the range, you're already well into the discount portion there. So if you bought at a premium, selling at a discount, you should be chasing that down at a very small range. So if you're looking for these relative equal lows or just this reference area here, that's where you'll be looking for. Good morning, Hadid. I'm very well, thank you, sir. How are you? Good analysis there on the 15 on the community channel there, Hadid. Thank you. Are you looking for this retracement back into this hourly here? I'll show you on my chart here. So I'm looking for this order block here to get retapped. Now that we've traded above it, I want to see this trade back into this level, like either the high here, which is what I've outlined here, all the way through to the mean threshold of that candle. So right to here. So I want to see it just come into that area and just tap. You can tap the top of it, which is just going to clear out the low, and then start moving. I'm looking for a reversal pattern in here for continuation. And then you want to see it get through this level and continue going higher. And on the hourly, we still have like 23, 380, 378 for a premium level. And you've still got these open SIBIs on this side as well. All right, so let's go into ES and see what we got in ES. Same thing with ES. I want to see us get above this candle here before I consider reaching for these premium arrays up here. Otherwise, this could be just a bear trap for you or a bull trap. And we've just come up near that mean threshold of the candle. So if we react off of that and come back down and we close below this level here, or no, right here at 6339, if we close below that, look for a run through the mean threshold of this candle. Now that's on the hourly level. And I got some nice little Dow Jones runs there yesterday. I think I was looking at the hourly and caught this nice little reversal off of here. And I wanted to get paid at the just underneath here. And it didn't quite reach my objective. I'll show you the setups I took there. I took one here right off this low. So we entered into it. And then I got out just down in here. It had already come down to here and it didn't, it's starting to react back. I was like, oh, I don't like that. So then I took this one up for a little tiny, small little run higher. From here to here, I sold and bought again back here. So anyway, the small little runs there. But that's a nice little hourly setup right there. So you trade through this level on the downside. You close below it, trade back into it, look for a short, mean threshold, rejection block. Did not pay myself at rejection block, so I deserve the small little retracement there. Should have paid myself at rejection blocks. And then we had a nice little pullback there. Natural gas is a mess. I want to see it get back down into here. Copper, we're already up to that premium box already in copper. We have retested these old highs in this wick here yesterday. Now I'm looking for this to continue pushing higher in middle LT, whatever, midfield LT. That's a ETF in Canada. That pays really good dividends too. If you're my Canadian guys out there, that's a nice ETF. Pays some double digits in premiums. 13 cents on a 10 cents, and it pays monthly. So $1.30 pays 13%ish right now off of $10. What else we got here? I'm not going to run through too many of these for you guys. Run the high, change in direction here. Next change in directions here. So if it comes back, look for this one to continue. You're way into the 50% range already for oil on a 5-minute chart. We've cleared out the liquidity here and returned back into this order block, or a little breaker right there. Runs up, takes out this little high here. And now you want to see if this little breaker here gets busted through, and then you run for these equal highs above you. This retracement back into these equal highs, I like that. If you want to see that start picking up now that you've bounced off of here, I want to see that start to climb back through this level and then start climbing higher. If it doesn't, look for a return back into this little box down here. I guess it could be this one here. This one overlaps, so it would have to put it to here. Right there. To right here. Right there. Sorry, it makes it look like I was form-fitting it there, but I'm looking at this one because this is buried inside the bigger one. And then we have another one below that. So if we clear this, look for this one. And if we clear that one, look for this guy down here. So they're kind of like a graded response. The higher one you want to see hold and then turn around and go back higher if you're looking for this to continue back through that breaker there. Or is this just a stop run? So this is where you wait and see. Remind me tomorrow. We'll be back in 5 minutes. Roger. I don't want to see Mosaic get below 34.76, this low here. You don't want to see it close below that. You have a small structure break. I mean, this is the last one left, so you got a small gap here if you're into Mosaic. I'm looking for this down here in Zoom Communications. DAX, we hit that premium level. This is that little run up yesterday. And then we were stuck between here and here. And see how it's run below that now? And now it's running for the lows. So it ran all the way through this little level right here in that smaller range. And now we've just accessed this order block one more time, and then we're going lower. So look for the next level on DAX around here. Gold. I got small little run in gold from here down to here. Started selling on the way down. I want to see this now get cleared above, and we're like, see how the line is like, we literally close on that line. So you can see in there, this is like a sensitive candles when you see them literally close on the high. Then you say, is it going to continue now that the wick is cleared out all the liquidity above the market there? Do we reverse on this and come back down again? Look for lower time frame opportunities for a reversal here, or if a body gets a nice bold body above here with a fair value gap, you want to see that fair value gap stay open and this continue on higher. If you want gold to go higher, Bitcoin, I love Bitcoin. You can snafu some good calls out of that. So you can see how we swept this little low here, order block. Always look to the left. We traded above it, relative equal highs. Come back into them. Look for the premium array. We traded above the premium array. We came back into the premium array. And then we went through the next premium, which is right up here. Traded through it, come back to it. Give this one more kiss. Proceeded to go higher. Premium box up here. We're through that already. We've come back, tapped it. Now you're looking for this to take out the mean threshold of this candle and go for new highs. Banks are still looking good. We're still in there, Gary. We're still doing good. I don't want to see Laurentian get back through here. I don't want to see this turn into consolidation with a big displacement candle using that, because that would be my fear that would be the summer low, the July low, and then run back into it, or a summer high, I should say, and then we're looking for a run down into August now. Then a pop back up into September. So this is a key level. You've already traded back through it already. So in order for, trading internal range, you don't want to see these two candles here get taken on the downside with a bold candle. If they do, then I have to rethink whether or not I want to keep that. Bank of Montreal, all those guys are doing really good. I don't see any changes in them. Disney, and I closed out of my Bell Canada. Gap, trade through it, come to it, continue down deeper into this range. So pull your fib tool from low to high. As soon as you see that structure break, come back into it. So this could be the first structure break. You break down through it, come back into it. Second structure break, you come down through it, into it. And then you come to 50%, pay yourself at 50, move your stop loss to break even, take a chunk of your trade, 50% of your trade off if you're into that. Go down to 60, didn't quite hit 60. You see this reversal happening and you pop through it on a close. Take profit model 2 would give you an opportunity, or no, take profit model 3 would take you out of that, because that's just closed above that reversal. You come back into it, continue going higher. Take out this high, tap it, run, take the next high. Now you don't want to see us get back through here. Using this breaker here, you want to see that hold price. Keep going higher. So you got to get through this imbalance here first before running up into the next premium bucket up here. Craig, a new chat. Hello, Craig. Wonder if this guy is any good. LOL. Did I miss crude oil? Craig. Nope, I'm just, oh yeah, crude oil, I already chatted about that. Thank you, Craig. Thank you, sir. Thank you, thank you. Hope you're doing well. I keep dizzying there just for you. Abs, I don't know if Abs is in here this morning, but if you are, Abs, this is your lean hogs. We were talking about this yesterday. This is a nice little tap back into the reversal. You've tapped it. Now you want to see a continuation. We want to get just a close above here today, and then tomorrow come back, retest this, and climb higher. That's what I'd want to see for here. Watch out, this isn't a bull trap on you though. So I want to see this close above here first before I consider, and a nice body above that, just to come a wick that comes down and supports that to go higher would be great, because then you'd pull in from low or from high here down to low, and that will put you at, now you'll hit your 50% already. So it's kind of one of those, if you get in, you want to make sure you get in below that 50% off of this order block here. That's what I'd be looking for anyway. That's all I'm going to say about that. And British pound, we got British pound finally ran up above those highs yesterday. Now you see how we've traded below the reversal. You trade below it, you come back into it, and then we continue pushing and take out this low. So now you want to see a body break through the low. See how the bodies don't break the lows there? They just stop right on there, get a little bit of wick, comes back to an old highs, and body opens and closes. And then all of a sudden we get another run back up into this level. See how we've closed above it? You come back, find support at that level, and now you want to see this climb higher and take that high out. So I'm looking for this high first, mean threshold of this candle, high, and then mean threshold of this wick, high. That's what I'm looking for British pound. Abs, did you get my little porky ones for you? Did you get the porker? If you missed it, this is the candle you're looking for. Yes, you got it. Okay, good. Australia, New Zealand, Euro. I got nothing for Euro. It's too chopped for me. The US dollar, we still want the dollar to go down. I do like this, re-engage the old lows here, and now continuation on the downside. I want to see it close now below 79.43.5. If you close below that, look for a retracement back into 79.588 to 79.512, and then continuation, and look for a range extension. On the US dollar, that should give you your bump on your foreign currencies. It's got to get below here first to get your confirmation that that's probably going to go higher on your foreign currencies. Canada, I'd like to see that. So what I've just said right here is what you want to see. This, what I'm going to show you here, is what you want to see here in American dollar. Take a note of this, so you guys see this clearly. This is what I look for all the time. This is just my go-to kind of setup that I'm looking for. So when we get a body that trades below this level, you want to target the next low and then the next low. Okay. And there's one more right there. That little imbalance, you have to include the imbalance inside this. Go back through Michael's stuff. It's not just the fair value gap. or the inversion in this case. It is actually the volume imbalance here as well. You need to include that. So you include all of that. So you wait for a body to trade below it. It trades below it, and then you look for a hunt or a run on liquidity. So before it takes the low out, you want to see it just trade below it, come back up and into this level, and then run for the lows. So it traded below it, came back into it. It's already swept this low. We haven't swept this low. So we've got relative equal lows below us now. And the moment it closes back above that level, then you don't want it. We're into the mean threshold of this candle now. That's the line in the sand. I wouldn't even want to see a wick get up there. So right in there is the mean threshold. If you start closing above that and above this level, then you're looking for another run back into 50% or more of this range, which is, and I don't see anything there except for this gap. So from here to here, you have a price imbalance here and a little, tiny little gap there. So we could get a retest of that if we close above this level. If that closes back below here, that's the maximum damage I want to see that do. Typically, you don't even want to see a wick get out of there. You want to see that hit this, roll over, and come back down. So graded response would be a tap of the low and keep going lower. Then the next one, your B level would be the consequent encroachment, your C level trade, and then D would be like maximum right there. And then it fails after that if we start trading through that. So you're looking for that kind of setup in US dollar in a return to here once you get through it. So that same kind of thing I showed you here, you want to see that here, but go lower. Silver's looking good. I like that long term. Back in May, wanted to get up in there. It took forever for us to get up there, but we got there. Now I want to see this roll over and come back down now into this range. Canadian dividends again. Really nice dividend. This one pays over 20%. Let's get back to here. Okay, so see how we've traded back. I wanted to see a retracement in here. Haven't got it. We may get it for 10 o'clock. But we've traded above this level right here. You see that? Body chops runs above it. Does not take out the high though. Runs above it and then comes back into that level, kind of like what we're talking about with the Canadian dollar and the American dollar in reverse. It comes back down, then it proceeds to run the high. So that kind of thing you saw right here is the reverse of what I was just showing you in the Canadian dollar and the American dollar is what you want to look for. So now I want to see a little buy from here. So we've traded above that level. Now your stop loss for me would be just sitting down below here. You've got another little fair value gap here. I don't want to see this get taken, and I don't want to see us trade through that level. So as a fail safe, that I don't want to see that fail, but I'm giving it up to here. A retest of this level. We've worked it quite well though, so I don't want to see that level get traded through. And it is 9 o'clock, so this could be a relative high and then roll over and come back down. We've got on the 15 or the 1 hour. 1 hour, we got 354. So still looking for that to go a little higher. Thanks Disney and Crude and Silver. Morning, just got here. Abs, sir. Russell, good morning. that. I don't like that already. See how it's trading back through here? So you got to kind of keep your eye on where it's going to fail for you. Right there. I've already traded below it. Tap it. It's probably coming lower now. That's it. Sweep that. That's all you get. Right back to here. Nope. I'm on the wrong side of that. So I want to see if that closes below here now. Immediate rebalance. Super choppy, not clean. But recognize where you're where it changes up, and if you're wrong, you're wrong. And if it's turn around and goes back up again, then welcome to Chopsville. That's not a clean setup anyway. Gotta will be willing to take some losses. Okay, look, so you see how the wicks just traded, took this low out, and the body stops right on the wick bottom. Still no close below that level yet. Just a little run on liquidity. And too many overlapping arrays for my liking, so I'll wait for something cleaner. I'll wait for a market structure shift. So this was the midnight open, first fair value gap, midnight open, and the midnight open range. Or right into this hourly or 15-minute. No, it's hourly. Mean threshold. This would be the time for this to turn around. See, it closed all the way through that level and just ran the lows out. So the next, that level, then this level, ran it all, took out the liquidity here. Now you're back into chop. So wait for something clean, because that's not a clean setup. 15 minutes not clean. Even the hourly isn't that clean, so wait for something on that one. Now if we close back above that level again, I'd expect to see that high get taken. And we still have this 352 as a potential upside. There's a little tap. You want to see that go higher now? Reach for this rejection block. You want to see it start to really accelerate through here now, right? I'm a little long right there. Stop loss is sitting down here. You're banging off this SIBI here, or this fair value gap. You want to see it really start to accelerate through here and take out that mean threshold. I like this big Bessie that we're inside. Yeah, the 830s. We've traded below it, above it, come back to it, look for it to go higher. Let's put your 830. Yeah, Hadi's bench trader. Hadi has his own channel now. Yeah, I should check him out. Check out his channel at Bench Trader. What are we waiting for? Waiting for a move through this mean threshold of the breaker. Still looking for these equal lows to get taken in Dow Jones. Trade below it, come back inside it, run the lows. Looking for a run on these lows now, or at least 50% of this wick right here. stuck between this breaker and that inversion, or that price imbalance there. And you're right in the middle of it, so. Thanks, Fiddlesticks. Yeah, glad to be home. Well, we just got nothing but fun here. There's the two lines that we're looking for on the upside, and we're smack in the middle of them right now. What were those? Those were upside projections for gold. Yeah, we were talking about that yesterday. Like, what was the upside when you got just new highs that you're constantly making? Then you pull your standard deviation tool and look for the first one, and then the next one. So 428 is the next level. No, he doesn't talk on Ninja Trader. He has his own channel on YouTube here. I'm out of that. Too choppy for me. That's going lower. Lows are swept. So I'm looking for us to get below that open, midnight open candle. If we can get below 328 on a close, I'm looking for again back into the retracement into this level here. See that retouched this low to the mean threshold. Yes, you can come back into that imbalance right there. Right there. All the way up to there. You've got an imbalance here. You've taken that low. This is trying to stay on the horse, you guys. Not that I'm trying to give you a trade here. Just trying to stay on the horse where we're sitting right here. This little imbalance. So we trade right to the top of that one. Back into this one. Now, are we going to push through that or push through this one? Right into that mean threshold of that candle. So we're going to get this imbalance right here. So if I take this, right there, and right there. That incorporates that one, and this one in the premium portion of this range. So we get above here, then you're looking to run higher. What's DAX doing? Don't we have a DAX in here? Oh yeah, okay. Return to this. I want to see that hold inside here, even if it runs back up into this candle right here. The consequent encroachment, and then rolls over and comes back down, takes out these lows. Anywhere inside here is a retracement back into it. It starts to lose its luster if we start to pop through here. And then look for a run on that liquidity above there. That's your premium array inside here. But ideally you want to see this just tap this, roll over and come back down. We're finding some sensitivity at the mean threshold of this candle. Right there. I got no reversal there on the 15-minute. Not for a while yet. This breaker. You can retest the breaker. And you don't want to lose the mean threshold of that. If you do, look for both of them. Take the mean threshold as the line in the sand. And if you lose that, look for another run back down into this discount box here, or the last up close candle here, or this. Charge. You're looking for long on gold. There you go. This is the next array. I'd be looking for any chance to see a reversal now. Now you've hit these standard deviations, look for reversals. If it runs through it and you get continuation, look for the next standard deviation half, like 0.5 increments, and look for a reversal opportunity. Because you're, like you say, you're venturing into uncharted territory here. So you don't know where the next high is going to be. So the only thing you got left is these standard deviations, I think. That's just my opinion. Look at that whipsaw. Clean out both sides. Too choppy for me. I'll be right back. Oh, look at that. Look at that. So well, that's right through our projected idea that we were looking for. Interesting. Okay. So let's see what we got going on here. See, that mean threshold didn't quite hit it. Just shy of it, actually. Reverse. That's the bear trap, man. Or the bull trap. Look at that thing rip. 293. Nope. That's killing people. That's trash. It's trashing players. Back to the breaker. $9.30. Got relative equal lows below us there now. $274. So it doesn't look too confusing. Now I want to see it run on those equal lows. To break even. All right. that one. I'd like to see us come back into this order block here. We're going to close below this and then come back into this. I'd like to see that continue on the downside like that. Look at this next price leg lower. Downside objective is here. That price leg to finish. Our good old friend the carrot. I got it just lucked out, got my short right here. So we trace back into that candle I was telling you about. Now I'm looking for that to finish off down here and I'm out. That'll be it I'll be done for the day. That's a big trade for me. Done. I'm out. Whew. That was it. That's the price leg done for there. I just took it to the bottom of this. That's good. Now we'll see if that continues to run through these lows and take out these this mean threshold of this candle is what I'm looking for next. There's that price leg completed, finished, done. Now looking for continuation. So that price leg's finished. Now, where are we going from here? Next is 223. Rejection blocks done. 223 and approximately 221. If we look at the mean threshold of this candle here. $218. Let me get that out of the way. See what kind of sensitivity you get at 218, which is that last down close candle's mean threshold. Let's see if you get any sensitivity off of that. Where are we doing for a day? Oh, wow. Okay. Then 206. What's the low there? 203.75. Yeah, that was a lucky trade, man. I managed to nail it right up at the top there. Catching this return back into here. I took one here, got off, got back on again here, got out here, got back in here, and then finally closed it out down there. So I chickened out. I should have just left it on, but whatever. That paid me. That's my day done there. So we're just looking for any opportunity to capitalize on this hourly candle now. Is looking for a reversal in here. If we can catch a reversal, we can capitalize on this big downward movement in price delivery here and start chopping back into these imbalances, all these little fair value gaps. So just waiting for a reverse. I'm waiting for a reversal now. Good work, Ollie. 224. 212. Nice work. All right. It's 204.75. There's the old low from yesterday. There it is. Awesome trade. Indeed it is. There's the rejection block, 188. We're looking for, I'm looking now for 170 and then 136. $130, 176. There's 176. I'm moving back into profit. And I'm looking for 136, 139, 136, and then 100. Locking in profits here. Jeepers. Just been nibbling away on the way down. Stuck my trade on Telegram. Done for the day. Good for you, Ollie. Good for you, buddy. Well done. Now looking for a drive down into 136. Let's go. There's 136. Now let's get down to 100. That was a nice one. Nice trade. Don't chase price now, no. That 136, 134 area there is the mean threshold of the day. Oh, it's going to keep pushing. It's going to the 100. It's going to fill that in now. Tell me somebody's got a runner on still. That is like totally sexy if you do. Just nail the bottom of that daily fair value gap. Don't be upset if you missed it, because there's an opportunity to grab this on the way back up. There's no way you're not going to get some money on that massive, nice little money bar there. Now, if that small little portion stays open, look at the daily chart. Look at your daily chart right here. And notice there's a little portion staying open there. If they just come down and leave that portion open, they just came back and tapped that old high. They leave that little portion open and you get a reverse and a run back up, because people want to see that fill and they get denied and it turns around and goes back up on them. Just kind of keep that in mind. So you look for lower time frame reversals. And we could probably just reverse back up into here at 168. Looking for sensitivity off of 168 to 187. Bottom of the hour. I'm looking for a 10 o'clock to give us our low. Just to give a little swing down to 101. If we can fill that on the daily, that'd be awesome. And then I'd like to see a reversal happen right on the fill of that daily fair value gap. This. We see that fill. At 10 o'clock. And then you catch the reverse from there. We could get a nice big run all the way back up and take out these equal highs above us. And that's 200 handles there. We're above that level already. Tap. You want to see it continue on the upside? See if that holds. See it run on liquidity below the market now. This is a little pop down back inside the consequent encroachment. Now I look to see this start eating through here now. Start our next big plunge down to 100. Eat through this wick. There you go. Pay yourself at that low. Traded below it. Come back into it. Pay yourself there. Stop loss moves at break even plus the cost of the trade. So it's a stress-free trade. And you want to see if it makes it down to 100. Let it go, let it rip. You don't want to see it start eating its way back through here. Tap that, keep coming lower. Hello, Derek. Thank you very much, sir. Now move to break even. As soon as it takes that low, pay yourself a portion there and break even. Now I wouldn't want to see it touch that again, so I'd be break even plus the cost of the trade. Let it run. If you want to go stress-free, just go stress-free and pay yourself a portion here, and then just take the last piece or some out here and leave the rest to run for a crazy-ass continuation here. Like, what do we got on the hourly level? Let's look at a 4-hour here. Oh, yeah, right here. Jeepers. This is totally doable. Right there. That's totally doable. 84. $84, $58, and 34 on a 4-hour premium box. We traded below it. We come back inside it, box to box on a 4-hour trade. That's totally doable. But also keep in mind, we could still reverse back into here first, tap this old low and go lower. But if this has got intentions to get back down into here, look where we are in the 4-hour window of opportunity here. We're just over 50%, 62% puts us right bang in that. So 62% retracement, and then look for a reversal. Anytime you see it running into these higher time frame objectives, then you want to see if we can get a continuation or reversal back up into this premium box again, or get through this breaker. So I'd expect to see this breaker hold price. The worst case scenario for me is the 4-hour comes back into this, which is like right there at 232, and then go lower. Right here it was 168. Half that wick at 184, 199, and then bad scenario is way back up here. There's 171. Next thing is the wick, 184, and then 199. And now you're above this level. So you want to see if a body gets above here, find support at that, and start coming back into this range here. See how the bodies are just freezing on there? They're not closing above that. I want to see a body get above there, not just these little pokey wicks. Yeah, be careful with that, Russell. It's not market structure shift yet. Until you see a body get above here. Just wait for 20 seconds and see. Now you got a market structure shift. Want to see this stay open as a breakaway gap? Let's see if we can retest these highs here. There you go. I don't want to see the mean threshold of this candle give way now. See that just keep going higher. Retest this candles. That's the order block. I want to see that one hold price and start pushing higher. And this little breaker right here, I want to see that back this candle up and go higher. And I'm risk-free on that trade now. I took that trade right there off that long. And I'm risk-free. So if it comes back and takes me out, I'm okay with that. Like it just did. Let me see that go. Still think that could go. Let's see it run. Gold had a nice reversal. Where's a 1 minute reversal there? Body trades below the low, trades back into the wick, and makes a run for the lows. Good. Yeah, that's a really nice reversal there, Russell. Good call. Good call. Whoa, look at that Bitcoin smack. Right off that rejection block. Look at that, right on the rejection block there. Perfectly. That's what you say, pay yourself at rejection blocks. You're going to hear me tell you that many times. And there's an example of pay yourself. If you're running for that high and you didn't pay yourself at rejection block and it snapped back against you and stole all your profits, you'd be pissed on that one. But that's a great example of pay yourself there. And if you get the high, bonus. And in this case, it's not a big reach. And that's where greed would have really nailed you. So another good example of rejection block. Pay yourself. Our friend Mr. Dax came up to our inversion. We traded below it, hit it, and now we're looking for those lows to get taken, and that's our downside objective. So DAX is working out as we called it earlier. And this guy, see how that provided support when you went through it, you came back into it, and then continued taking out the lows. So downward dog. Disney's bounced off this level still. Got some support there. You're below this level. Find support here. Now that I expect to see this roll over here and start coming back and taking out this and run back into this discount box down here. And that's good, Gary. If you're still watching, it looks lovely. Carry on. ES is giving you the same setup for a long at 10 o'clock. Tap. You want to see that keep going higher now? Now ask yourself, where is your fail-safe? Where's the fail-safe for you in here? And the fail-safe for me would be right here. You don't want to see it get below 326. It's a nice little tag. You want to see a market structure shift is going to break this high here. I do like the fact that the body is above this candle, but if you ignore the wick, you want to see a nice body structure get above here for a clean. I know, Russell, you were talking about having this. They're both a break in market structure. It's not till the body gets above the high, but I do like this candle. So if you start to dig through where I see you don't want to see it get back through that mean threshold. See, it's already through the mean threshold, came back to it. Now you're going lower. So you don't want to see it get through here. That's a tap. Now you want to see it leave from there. You don't want to see that whole close below that. It's like precision. Now you want to see it kick off here and go higher. That's your line in the sand. You don't want to see that go lower than there. And a market structure shift, again, has to be a body above here. I do like the body's getting above this last outside candle, but then you don't want to lose the mean threshold. If you're going to have that, it has to stay inside the mean threshold. If you start to lose that, be concerned that you're coming back deeper into the range. See how this example here, you have a body that trades above, mind you, clears out the high there as well. So you'd expect to see that just come back and tap this and go higher, which it did, but then you don't want to see it eat through the mean threshold of this candle either. You want to see it just come back and tap the high or the open and then leave. So the fact that we've dug all the way through the mean threshold of this tells me we might come down even deeper into this range here to 50% of that range. So that'll put you right back into this consequent encroachment of that inversion below you here. So we'll see if that works. See if we get a run back into here. Yeah, we still don't have anything here, but we do have a retest of this fair value gap here. We have no reversal here yet on a 5-minute, but we do have this change in direction. And we create a fair value gap. We come back and just tap that there at 165, which is right on top of this guy here. Again, this breaker, and then go higher. And then you've got the consequent encroachment at 154, which would put you right in the consequent encroachment of what we're looking for is 50% of this range. So 50% of the range puts you right in 50% of this BISI. So there's the tap on the top. So now we've just hit the bottom of there. There's a perfect A1 setup if you're looking for a run off of a fair value gap. See, there's your light, medium, heavy stop loss sits down here. You don't want to see anything get through that level. And again, right now in a 5-minute chart, we are not bullish. If you want to find support here, this has to stay open for that to start breaking through this level. For me, anyway. Hello, Ali. How you doing? Yeah. So if you did take an A1 setup there, then you want to make sure that you pay yourself at 50%, pay yourself at the first high, and then move to break even and see if the rest runs. It's 10 o'clock. I like this as a potential reversal on the hour, like 9-10 turn on a Tibbs on the hourly basis. If we start breaking through this level again, then we're looking for 11-12 for a lower run. And clearly I don't want to see that. I'd like to see just this be the turn point and then start pushing higher. But if we don't start moving soon, you're looking for an 11 o'clock run through this, clear it out first, and push higher. See, now we've already come back up into that level we talked about on the 4-hour. So that to me is a perfect little tap to roll over, come back down into our discount array. So I've got two conflicting points of view. One tells me this looks like a great place to go higher, but because we're stalling in here and there's relative equal lows below us, nothing clean, sharp, and we still have that 101 level to hit, that this is potentially the next downside objective. Now that we've tapped this, I like to see it roll over now. If I'm bearish on the 4-hour, I want to see this reach from my discount array down here now that I've tapped a key level. So you look for a reversal, and we have a body that is now trading below this level. We've come back into it. I want to see that roll through here now and start digging into this range and then see if we eat through that. So I want to see if this now rolls over and comes down. Have to pee. So we're up to the mean threshold of this candle. We can get a nice little tap back into here. Or we see it ride through this level. We have a continuation, and I'm looking for this area right here at 232. Aaron, I'm missing the previous objectives. Probably you analyzed, but could you look at the DAX again? Yes, I certainly can. DAX downside objective. We've reached these first ones here. Next one is this downside objective here. Once we traded back up into this, pay yourself here, and you're looking for this one here. It starts from there. Actually to here. Right there. That should incorporate that one and that one inside there. So you're looking for this downside objective right here. And if you go into the lower time frames there, let's look at the hourly and make sure that you're not. So I want to see that return into right here at 040 to 061. I don't want to see it get, if it closes above 065 on a close, then look for a run back up higher into this range. But I wouldn't want to see it close back above that. That would be, to me, an ideal place to continue going short. Back into this level here. Right now, you've just come back into the breaker. You've touched the top of the breaker. So retrace back into here, roll over, come back down. That's what I'd be looking for. So then you go to the lower time frames and see if you get a confirmation of that very run. So go to a 15-minute. They're running up into the premium area right here. If that rolls over now and comes back down, look for this level right here at 0.15 to get taken on the downside, come back into it, tap it, and then continue running for this low, pay yourself here, and then the last one's down here. That's what I'd be looking for there, Ali. There we go. Give me some lift off now. Looking for that level at 232. I'm now break even plus cost of the trade. Actually, I'm not profitable. Let's pay ourselves there. Pay myself a bit in there. You're welcome, Ali. Anything long, not me, are at 50s in the smaller range already. Looks like I must be looking at a different one. Look, yeah, I'm just looking at a 4-hour retracement back into a very sensitive level there. So I'm looking for that at least. What's the high of this candle right here? 232. Let's go. Get up there. So 232 to 253. So we can get a retrace. I'd like to see this stay open here, like half of that, not even come back to this. But if we do come back and fill right there, leave a portion of this open, graded response. So I'm looking at this as a graded response right now based on that high and this order block here, which is a breaker. It takes out, it's a parent breaker of that whole run to take out that little low right there. So I want to see that hold and start going higher. You can come back and give this a little kiss. You could fill that, I suppose, but I'd like to see it stay open. So A, B, C, D kind of response. Well, that's definitely not the same on my there's the tap. Where do I get my 232? Right there. 4-hour chart. $232 to $253, $252. And if you also take this candle or this range here, where we're sitting already, it's at 50%. So 232 to 252 puts us at 62% retracement. 252 puts us right on 70% optimum trade entry reversal. So keep that in mind for this retracement into here and then slam lower off here. So that's the objective. I want to see a 252, like a 62 or 70% optimum trade entry reversal. That will give me a little smile. I'm already so that's my upside objective right there. 252 right there. Okay. So if you look at this candle right here and look at its low is 210.50. Look at this candle's close, 211.75. This candle's low, 204.50. So it just dipped into this 5-minute, ran above, came back on inside, and you want to see that accelerate higher. You want to see that push, 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 push now. That's the 5-minute reversal. Just give me my 232 already. It is taking a long time, but it is slow, insidious, and the order blocks are holding. You see, I don't get too nervous until I see order blocks giving way. So this one here, it's come back, found some support at that order block. Now I want to see it get above this order block here, find some support at that. So if we start to roll over here now, and we take this out and take this downside out, then I'm out of that trade. That's crap. I feel like it wants to take another run down here at 11 o'clock. So I'm out. I'm closing out of that. We're already below that level right there. So I'm out. We still may get my 32 yet. Now, if you take this last down close candle, this is how precise I want to be. But I'm just going to show you something here. You take this last down close candle, you take its body, and you go from the low or the open to the close, or close, open, close, whatever. Look where 50% is, right on the Beezer, and that is 228. Where did we hit? 228. That's 50% of that. I wanted to see 232. That just pop up into there. But that is 50% of that candle. Right on the money, folks. Right on the money. So that's why you don't want to see this break through. Otherwise, that is the area it hit. It says, I'm good enough for that. And I'm rolling over and come back lower. So you're looking for a market structure shift. And this candle here to give way its mean threshold. And then I'd say, yeah, we're getting back into a bearish type of environment. That's how I'm looking at it anyway. Does that make sense to you guys, though? Good for you, Kevin. I love the fact that you recognize that it's not functioning the way you want it to. See, it's already acting off of that mean threshold. So we're already breaking that structure. We've broke the structure now. Come back into this level. Tap that little low right there. So I'm glad I was out. Order block. Trade back into it. I want to see 207, 208. all the way up to 212. There's 207. That's just coming back into that order block. Now I want to see that roll over and come back lower now. I guess there's a little tiny piece left in there, which would be the 208, 209 level. And then the mean threshold of the candle is 212, 213. So I want to see that keep coming down now. Look at 50% of the range, and my first profit's going to be there. Move to break even. I'm going to do internal range liquidity right now. So I'm in short here. I'm looking for an internal range liquidity hunt. There's the 209. I don't want to see it come all the way up into here. Just want to see that roll over now and go down lower. So now I'm risk free. It just took me out. This waffling around here. I just wanted to see it get down into this 50%. We've already traded into that, so get short there. As soon as it took out that low, go to risk free and wait. And it just came back and took me out, so it's too close to lunch hour now. Or that 11 o'clock. This could just blast off and start going higher and dig into this some more. But right now I'm in a change in direction. So a better market structure shift would be down here. But I'm just looking at this little internal range liquidity hunt. So look for 50% here. We just keep bouncing off this order block, which is what I'm looking for. You want to see gold? Go up there. Where are we at with gold? Oh yeah, there's a nice little reversal right there. Change in direction. Go higher. Look for... You got to get through this mean threshold of these three candles, or this guy right here, 34.41. Close above 34.41. You do not want to see 34.37 get closed below. You can get a wick down into here, but stronger is just a tap into here. It's consequent encroachment and pushing higher. For me, anyway. See how this is just back and forth off this candle? That's just high resistance, so don't even play in something like that. There's a 1 hour inversion, you say? Yeah, we still have not hit that 238. We have hit the low. I don't see anything else in there. Just a little imbalance right here. I still want to see that just roll over and come down now. Let's wait for 11 o'clock. I'll wait for a market structure shift down here. You've got all the way down to right. We can retrace back into a 5-minute inversion. 50% of this wick, or this BISI here on a 5-minute. I like that. And we can push higher. $184, $185 puts you right here. You're back into that premium level again. If you pop through that, look for continuation. That's all we needed here. Back inside it. So we came back to that order block here. You broke it out above it. You come back to it right here. Right there. And now we've traded above that inversion. And then the highs are next. We've tapped the high. Come back into the inversion. So fair value gap right there, a little tiny one. Or are they going to come all the way back into here? Or this order block here is going to hold and we're going to push higher. And we're back into wanting that 232 again. Half the wick. Equal highs. Pay yourself the equal high if you're in here. Pay yourself there. Pay yourself. That's why you pay yourself. At the next high, you're back into this inversion again. You want to see that keep pushing higher now. If you're in there, pay yourself at the next high. Dix waterfall. Just give me the 232 already. Right off that 1 hour. That would be the, SIBI institutional order flow entry drill. Roll over and come back down off of this low. So I can argue both sides of that right now. Like this would be just drive straight back to here. The 4 hour still would love to have seen that 32. I was just 1 3/4 short. But institutional order flow entry drill on a 1 hour. That inversion here is still holding price, still bouncing off of it. So for me now, I'd have to see this structure break to go lower. Yeah, it's really junk. It could be bouncing around here for hours. Yeah, I agree. It's not clean price action, so don't even engage it. I'm not going to engage it. I was trying to nibble away at it, keep going into, risk free, and it comes back and takes me out right away just because I don't want it to give up anything in here. So as soon as it takes a profit, I'm nibbling little pieces off and getting 1 minute profit things. But yeah, that's what nibbling the cheese is about. See how we've traded below that now? We're back into it. Now I'm bearish inside this range. And then if we lose this level right here, which we've just tapped, which is 207, if we lose that on a close, then I'm looking for mean threshold and then a market structure shift. So right now we have a change in direction, change in the state of delivery. That's how I see a change in the state of delivery anyway. It needs a blast off candle. So now we're through this. You want to see if this holds price. Otherwise, this is the consolidation of going above it, below it, above it, below it, and not really getting anywhere. An internal range liquidity, you're already over 50% of that little range already. You're at 62%. So if we were tracing it here, get above it, find support at it, and start pushing for these equal highs again and looking again for 32. I'm okay with that as well. So I go bullish again if we get above here on an idea. Just staying on the horse, not trying to trade it, just trying to stay on the horse right now and just trying to understand price action. Sorry, that was the high right there. So still bearish overall. Inside this little range, I'm still bearish until we get above here. Then I switch to bullish again because it's another change in direction or change in the state of delivery again to going higher inside this range. So we've gone from premium to discount. Now we're eating back through that premium box, find support at it. And then there's that last little piece right here. So watch this. Gold's ripping higher. Did you get the high? Did you get the reverse? Inside here, it trades back into it. Beautiful. Like that's a perfect run right there. So we said we didn't want to see it trade below that. And look at it, came right into it. Gave it a little kiss. And off you go. Pay yourself at the high. And now you've got the next potential reversal. So you do not want to see more than 50% of this give up. And you want to see that keep climbing higher. So good for you, Russell, if you're in that, buddy. I like to see it. I like to see it. So if you start running above this high, pay yourself. Because it's a high rejection block, pay yourself, or 50%, pay yourself, whatever your strategy is. Because if it just comes up here, rolls through and takes this out, and we get a market structure shift, we're going lower. So there's your rejection block. 50% and the high. Good for you, Russell. Glad you're getting it, buddy. DAX traded back into this level right here that we're talking about. So now you want to see it hit that, and it did. Now we want to see it roll over and come back down. So those of you who are looking at DAX alley, if when you're talking about what's the way, which way do you think it's going to go? My downside objectives here. We just wanted to see it trade back into that box. It did. And now you want to see this is a good indication that it wants to go lower. So now you don't want to see us get back through that level. That's been done now. I don't want to see any higher than that spot. So keep coming. So if I was entered in there, I'd have my stop like sitting right on top of that. I'd have it break even because I don't want to see it revisit that. We're through that level now. Now we're back into tapping this one more time. This is just super choppy. I'm not interested in playing in this. I'm not going to give back my profits for the day. Come on, start going. Lift it up. Let's go. Welcome to the lunch hour smashings. Yeah, it's not really lunch hour though. It's only 11 o'clock, 11:09. So there's that little tiny imbalance right here. Stretch it out. You'll see it sitting right there. I'm going to take this dude and I'm going to put a little right there. And I'm going to make it something Watch, see if it hits. See how we just bang on it? Now you want to, nope. That's not what you want to see. Watch where it closes, but that's this wick here, not what I want to see. Too choppy. This is just an indication that it's going to beat you up now with wicks. And it's just going to run back and take away your precision, and you're just going to get beat up with wicks. So like I would have sat there just below that level, and it would have taken you out, and now it's gone back higher again. So don't frustrate yourself with this. Move to the sidelines, or just sit there and enjoy Russell's. See, did you pay yourself at the rejection block? See how it ripped back against you? Pay yourself at rejection blocks, my friends. Comes back, fills the fair value gap. You didn't want to see that. You didn't want to see more than half of that. You want to see that act as a breakaway gap and go higher. Now, if this continues, because now you've traded back to the bottom of it, you've traded back through it. Now, if you just tap it and go, you want to leave from here. You don't want to start revisiting this over and over again. You want to leave from there. You're on it, Ali. Good work, man. Good work. What's Bitcoin up to? Oil. Choppy. Choppy. Disney. Did we get anything out of Disney yet? Oh, we're back into here. Disney, you're kind of stuck in Disney because I'm stuck here and I'm stuck here. I'm in the middle of those two, and you're sitting right now. If I take that there to that there, 50% puts you right here of the distance. If I stick it here on the high of it, 50%, you're right on 50% of the distance between going higher and going lower, and taking out that candle. So I got nothing in Disney. I'm stuck. Ideally, I'd like to see this order block here. Now we've traded through it. Hold price right there. Hold price inside the mean threshold. You're already through that. You're through that. That's got a hold price to go lower. Order block, traded above it. Look at that. See, that's not clean. You just come back and tap it and go, or it's open and go, or the mean threshold is the line in the sand. But look, just eat right through it. Smashing through these levels. This is just not even fun. Not even worth playing in, you guys. Not even worth playing. Is there anything else you guys want me to look at? Is there any particular asset you want me to look at? In premium, Derek, could you look at GBP versus USD and the Japanese yen? I certainly can. That's over here. So GBP USD. We wanted to see USD drop, right? So it's dropping. It's given us what we wanted. We wanted to see it drop because we wanted to see British pound run higher and take this high out. So far in the last couple hours from when we talked about that, it's given us exactly what we're looking for. So we wanted to see it get through this level, and it's dropping through there right now, which allows your foreign currencies to run higher. And they have run higher in the last hour or so. They've swept down into that little discount and then ran all the way back up to this premium. So we're right into the wick, 50%. You're through the wick now. Now you're just looking for these equal highs to get taken. So I like that continuation on the upside. Take those highs out at New York AM session yesterday. I want to see that giveaway. And what else do you want? Me Japanese yen. So let's have a look at the yen here. The yen. So so what you want to see, Ali, is you want to see this level right here. This is your breaker. There to there. So you've swept this low. They're relative equal lows now, but you've taken that low out. You want to see a price break above here, come back into this candle or that fair value gap right there. There's a little tiny fair value gap. Before we take that, if we come back and tap this, you want to see that continue and take out that high. You want to get a close above this high, and then you want to start running up for a premium box. That'll incorporate this little fella right here. And that price imbalance there, you could include this all the way down into here as well. So you could do this. So you want to see this give you this area here. Ideally, that little spot. And then if you can get above that level, on a close, look for rejection blocks, and then look for a further run on these old highs here and this gap. And then look for mean threshold at the last up close candle, rejection block, half of the wick, all the wick, and then run for the highs. Those would be the upside objectives. But you got to get past here first. Otherwise, this could be just a simple rollover at 50% of this range from here to here. 50% of the range will give you a tap, roll over, and give you a bull trap. That'll catch you in a bull trap, roll over, and come back down and take out these relative equal lows below you. We have an immediate rebalance of price right here. So for a downside objective, I like from here to here on that immediate rebalance. And that would be like a tap here, roll over, and come back down. Take out these people that want to see this go. If you see it starting to get above here, you want to see a fast acceleration because this has been worked like crazy in here, right? Back and forth. So you want to see a rapid candle start to move. So in other words, you want to see this accelerate through the downside. So as this accelerates quickly through this level, I want to see it boom, blow through it, come back, give this a little kiss, tap 50% or the bottom, or all the way up into that little area right there, which is what you've been seeing me calling on these other time frames, like the 4-hour time frame in the New York session or the NASDAQ session. You saw me always looking for that upside level. Somebody had asked what was the 232 that I had. That's the kind of thing I'm looking for. It's the same kind of thing here. I want to see it accelerate through here, come back 1, 2, 3, 4, and then 5 is that box area there. So there's 5 different levels I'm looking at inside there. So I want to see that really accelerate through there so you can allow this Japanese yen to really start to book it up and get above this level and start running higher. I hope that helps, Ali. This means all currencies against Japanese yen will drop sharply on a daily basis, right? All currencies against the Japanese yen? It depends. If that's the stronger one out of your pairs, like pair it up with, depends on what you're doing. So let's do this one, for example. Let's go, let's do the beast. And that is JPY and GBP. This is the beast. So if the pound is rocketing up and the yen is starting to come up, but this is the stronger one of the two, you want to see when you compare Japanese yen to British pound, that means the yen, as you can see, it's going lower against the pound. The pound is the one you want to trade, not the yen, because the pound is obviously causing the yen just against the yen. Against the pound, the yen is weaker, right? So you'd say, I want to be in more of the dollar or the pound versus the yen. Now, if you're trading the beast, you want to see this close above here, come back, find support on this candle, and start running back through. You're in this tight little range here now, and there's the premium level up here, so you're already hitting that. So you want to see that freeze on there, come back down, tap this tomorrow, and then start running higher, which is what this is what we're hoping for. Run down, come back, tap that, which would be a run down, tap this. So if that, as it comes back, it'll drop this down into here and then push higher. So so not all currencies against the yen will drop sharper, because the yen, if you're comparing those two, the pound is running for its upside objective, and the yen hasn't even come close to its upside objective just yet. Oh, sorry, hasn't come close to its upside yet. And it's against the pound, it's not as strong. Like Euro, GBP, and USD. Like Euro, GBP, that's, you find the 6 sister and trade the stronger one. That's how I do comparative analysis between currencies that are against. You want to find out which one's the stronger one, or Japanese yen or the pound, put them together, and then say, okay, well, Japanese yen's definitely not the stronger one of the two. So anyway, that's how I'd look at it. Meanwhile, back at the ranch, they're still sawing wood. Yes. Thank you, I get it. Alrighty. Anybody else have any questions you want me to look at? Anything in particular? Right to the breaker. We've taken out a low. Trading back into it. I want to see that start pushing through this mean threshold, go higher. Gold. See how gold kind of broke through that level now? Russell, pay yourself a rejection block. If it goes back through here, it traded through it, came back up inside it, and then went lower. That's classic reversal. Went lower, and now you want to see if this order block breaker here gets taken on the downside. Otherwise, bear trap. If that breaker doesn't get taken, it's a bear trap. So you want to see it came right into the mean threshold of that last close candle. See that? And then we got a small little reversal, pop back up above it, and we've come back. I haven't quite visited it yet. So you want to see this level get taken, find support inside this candle's wick or body, and then start pushing for the mean threshold again. Clear to that, and then keep pushing higher. And I know in gold, that can be quite a sizable amount of profit lost to try and navigate this run higher. So you're kind of stuck right now between, you don't want to see that little fair value gap below you here. You don't want to see this level here give way. And you want to see this level get closed above. And then you want to see 444. So watch here. If it closes below that, we're running lower, and you're looking for this box down here. Auto gold trade stopped out, but it was a demo trade. Okay, I got you. Well, it's good practice. It's good to see where you're sitting anyway. Yeah, it's too choppy for me, Hadi. I'm not touching that. That's just, you're going to get mashed around. It's a great place to practice staying on the horse, though. Even though it's choppy, stay on the horse, practice. We want to see this order block hold price all the way from the wick to wick. You want to see that hold price and go higher. Now that you've run that low out, that order block to the left, hold price, and the mean threshold's already been taken, so it's just mashing around. See how that mean threshold is a line in here that's got some support. It's mashing around on there. So this mean threshold now, and these two candles, along with the one that's right in the middle, see how it's compressing? Now it's got a blast out of here, and that's the pivot point, and that's the driver for lower and higher. If that makes sense. That one. And that one. That's what, to me, that's what is holding price inside that little range. So who wants to trade that? Right? Yeah, this 5-minute one's looking good, Hadi. I like it. But it's just too much chop for me. You know, this is looking, this little 5-minute one here tells me it wants to go higher, but we know we got come back and revisit this consequent encroachment first. And I like this 5 minute. If we can kind of leave this candle open and leave it as a breakaway gap, along with this one here, I like to see that whole price. And that 50% of that BISI is the top of this candle here. So that'll just give you a nice little dip back into your 5 minute inversion, and then start pushing higher. Lots of highs here. So, but the hourly says I'm coming back to an old low, and I want to roll over and come back lower. So I have conflicting points of view. One wants to go higher. This one wants to go lower. We could go higher, I suppose, to the mean threshold of this candle, the mean threshold of both candles, and the consequent encroachment of this SIBI. Those are like the three key levels I'd be looking for. And if you broke that high on a close, then we're looking for this, a fill of the fair value gap, and then pushing higher. So I've got different points of view for hourly, 5 minute. What's a 15 minute look like? 15 minute is sitting right at that consequent encroachment of a 15 minute first presentation. Right? Oh yeah, okay, so we could see this. Look at that. Let me have a look at this. A D, we might actually have something here. See how we've come back into this breaker? And if you take the breaker from low to high, so we're coming back into it right here. We're nailing it. And then you want to see this roll over and come back down. If this breaker holds, now if we run down, come back into the breaker, hold and go lower. Now, here's the thing. We have a fair value gap inside that breaker. So I'd like to see price run into here. And this is the same thing I've been telling you guys about on the that's the same thing I've been telling you about on the 4 hour, is that run back up into this area and then find support at that to go lower. So now we can find support here. Your A1 setup as it comes back, taps the low or the body, and then rolls over and comes back lower. And then we get the next price leg lower. So this would be something like this. So here's how I kind of argue with myself about where I think price could go. So if I'm looking at that level, the ideal place, you're looking for a 980, then the body, which is 985, then the mean threshold, which is 991, then the high, which is 23 big figure, mean threshold is 2311, and then the high of that, which is 2302. So you're looking for all the way back down here. It's the next price leg. So watch that. Okay, so we're getting up in here already. So now you got a body above here. Come back, give this a little kiss right on these equal highs here, right on the bottom of that gap, and start to run up higher. So that would be 23 or 22, 22.3. Yeah, I finally got my 32 on my 4 hour. See that? There's my 4 hour gap. Finally it paying. It's in there, right there, and we hit it. Now, these are the key levels here, here, and here. Now I'm looking for any chance to see a reversal. This could just go smash all the way through here now, and I'd be totally happy with that, be completely fine with it. That's the 4-hour upside objective. 232. Right on the money. Look at the bodies just froze on it. Wicks in it, moved in there. Bodies froze on it. So now take out this low and this low. Market structure shift. And that's the objective. It's a mess recognizing that you don't like it, and having the patience to wait for a clean action is the #1 lesson. Recognize the accumulation stage and then wait for manipulation and distribution. That is correct, Ollie. 100% agree. Agreed as well. Just chilling with patience sprayed on. Bee feeding time. See you all tomorrow. See you later, Derek. Come on. Let's take this down now. Let's take it down. Take it down. I just want to see a structure shift, and then I'm in for this to go short again, and then look for that next price leg lower. Right back into our discount box. Ooh, let's just look at that 15-minute thing we were talking about. Let's go back and do that. Now, if we do this, I just want to see if this lines up here now. Humor me, you guys. Humor me. If that is the bee's knees, as Derek would say, that puts us at 23 big figure, right? So 23 big figure on a 4-hour chart puts me at 23 big figure, just shy of that coming into here, 23.34. So I'm pretty close. For the next price leg lower, puts me right into my discount array. So remember, you can go all the way up to 250, whatever that candle's low is. 251.25. Watch here. 251. That puts us right into that midnight open range and right on that Monday's first fair value gap after midnight. Let's wait for some action, some change in direction. Still inside this fair value gap here. We're above this level. Come back, find support at that level. Let's go. Premium array. Yeah. Not much here. Order block. Premium is right here. And you're already in it. So now you want to see this, tap this, and really accelerate through that candle. Start driving up. Pop, 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 pop. Let's go. Bitcoin. DAX. That's going to waffle around in here. Well, I want to see that let go now. Still not doing what we wanted to do. So it started coming back down, then went up, still inside that fair value gap. Now, here's the thing right here. I don't want to see, make this bigger so you can see this alley. Mark this out on your chart, alley. Take that candle's low to that candle's low and mark it out. Look at the highs. You do not want to see a candle close above here, because that's the target then. That little pop up there, so you want to see it pop and then leave. Like this was really nice until it started coming back again, and then it popped through. Not a good sign. And we're obviously waffling around here, so this to me feels like it wants to get back up here now. I want to see that tap come down. See, when you want to demand a lot of price action, you want clean price action, you want to see it come down, tap that and leave with intention. But you see what it did is it goes down, comes back up right in the middle of that candle. It freezes on it, comes back up, and it's just banging around inside our fair value. Yep, our first presentation. So you've already wicked through that level, mean threshold. This is my line in the sand right here. I don't want to see it get up there, but if it does, wick, roll over, and get back through here. And what is that for that whole range? 75%, 79% optimum trade entry reversal. If you close above here, look for that objective. Why do you draw the line from the low? Can you explain? Draw the line from the low? Haragaran, which one are you talking about? In NP. Okay, sorry, let me go back there. Why do I draw this line and this line? See why how they've become important while I've been chatting away there. Why do I draw that line there? Between this, inside this small range here, so this candle and that candle makes a swing. Largest up, last up close candle in this small little range. That mean threshold is the midpoint of that. You see how it's become sensitive? Now you've traded through it and the bodies are respecting it. This one here, mean threshold. See how the candles are respecting the mean threshold of that candle? So Harrigan, that's what I'm looking for is, are these levels looking for, if I can get above them, then I'm looking for a run on the high. So you get above it and it ran the high. Now we're pulling all the way back down inside it again. We've dropped below it. Now we want to see if we sweep this. So we swept the highs here and now I'm sweeping this cluster here. This mean threshold is what is next. So you see how we're going to freeze up right on there. And then if that comes back up again, I'm inside this small range. So now this candle here would, or this line would go to that mean threshold there because it's the last down close candle before running higher. And there's a little swing here. So it would go like, I'll draw another one here. These are just areas of sensitivity I'm looking for right there. That mean threshold. And I use the body only, not the wick. Does that answer your question? Okay, thank you. You're welcome. It's when you're in a consolidation like this, it's kind of hard to say where the hell do you find some leverage here? Where do you find some support? Or where do you find what candle in that lot becomes important to you? So if you look closely, you look for these inversions, and then you look for the last up close candles and look for the small little ranges that you're working in, because in a consolidation you're looking for a run on the highs and the lows. So you want to know when are you going to get that high broken? When you see a mean threshold give way on a close, you can expect the high to get taken. Okay. So here's an interesting example. So if I took this one here, so I'm going to blow my theory all to hell here just so you can go, oh, now you're annoying me. So you see how this high has been taken already? Now you look at this candle and you go, oh, if we get below this level and come back up above it, does that mean I'm going to go higher? Yeah, that's what you would expect to see, right? But if you see it close below it again, then you go, now I'm on the wrong side of it. So you got to be able to switch back and forth in that candle. When you trade above it, you go, good. You can come back and tap it. I want to see it go higher. If it closes below it, then I'm thinking I'm on the wrong side of it again. We're going to come back down deeper into the range to this discount array. Okay, so my theory of if it trades above it, it's going to reach for high. That's what you do. And then when you get into this, say, all right, now I want this to go higher. If it closes, no, shit, I'm on the wrong side of that again. So you've got to watch how that candle closes. When it closes below it, you go, yeah, I'm on the wrong side. Now I'm pulling back into the range from here to here, like array to like array. It's like going from box to box. This is like array, mean threshold to mean threshold. So my box to box theory is the same as a like to like array theory. So mean threshold to mean threshold. Okay. So you've gone from this mean threshold, you go to small fair value gap, order block. So always look to the candle to the left, which is the order block, the up close candle. After you see a low taken, reversal, body trades above it, you come back inside it right there. Now you want to go longer. Mean threshold, we get above that, find some support at that, run for the rejection block, an old high. So that's kind of like what's going on in my head now, what I want to see. So now rejection block, forget that, return to here. We've taken that high. So here, if you're going to go for that long, right off of there, you got a perfect entry, pay yourself at rejection block, and now you've closed above this level. So now this candle, or the last up close candle, which is this guy right here, becomes important. Tap it and go higher. Mean threshold, tap it, go higher. You don't want to see it close back below there because you want to see this high get taken now. So right there, hold price, push higher. Back for the PM session. Thank you, Darren. Have a great day, everyone. See you, Hadi. Maybe get some action around 1 p.m. Agree. Have a good one, Hadi. That's the highest up close candle, so take that one. Watch that level. We've traded above this level now on a close. Remember, we want to see it come back to here. So yeah, see, we're through that level, but we've come back to the level we're looking for right here. That candle to the left. Tap it, and now you want to see it go, 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 go. You don't want to see it start eating into it. It's mean threshold. If you lose the mean threshold, look for another run back into here. So we went through it, came back to it, ran lower. Now I want to see if we actually eat through the mean threshold of this candle here now, or this finally gets back through that level. This might be it for me too, you guys. Unless there's something you want me to look at, this might be it for me until I'll be on Telegram there. If you guys want to chat on Telegram, Russell and his gold. Russell's gold. See how we're through the mean threshold already? Back to the imbalance. Look for this revert, this down here now. See how we've just hit it here? Now, do we eat into the mean threshold of it or consequent encroachment of it, or are we just tapping it again to go higher? This is consolidation, man. But this is how you try and stay on the horse. These key levels, look for them when you trade through them. Look for the next objective. Now, if we get back through this level, find support, look for that high and then that high again. See you guys. Have a nice day. See you later, Ali. Okay, I got a couple more minutes and then I'm out of here unless it is something you want me to look at. Thanks for everything, D. See you all tomorrow. See you later, Abs. Does anybody want me to look at anything in particular before I leave? I can scan through these quickly. Messy. We've traded above this. We've come back into it. Mean threshold. Look at that wick. Crappy wick right through it. You want to see that just nice come back tap right there would have been nice without the wick and then just leave. So this has a more of a bullish feel, though we have not broken that old high for a market structure break to see us run back into this level here. So this one here we have broken. So we've passed the got through the bull trap here. Now you want to make sure that that holds price on a close and keeps coming higher and then takes this out again with a body. If not, we lose this, we're coming lower for those equal lows. Rest. Copper. Copper's hit that level we're looking for right on the money today at 8.99. We called that little level there. Go back through yesterday's video. You'll hear me talk about that one. These guys adjusted their dividend, did they not? Nope, they've always been consistent. And that pays dividends. I've been in this one for like 5 years. It pays a consistent dividend of 12-15%. And it's every month consistently pays. So it's 1% return on your money every month. Hold it for 100 months, get your money back. Oil. Okay, here's oil. Yeesh. Sorry, Russell, man, I don't like oil at all. It's just crap. Right here. You don't want to see this get taken on the downside. There's nothing even on a 15-minute chart that's not cleaning up. See how you, when it gets really choppy, like Hadi likes to do, and I totally agree with it, goes to a 3 to 5 minute zone just to kind of see if we can clean it up a little bit so it's easier to read and it's not so choppy. But look at this, all the way up to 15-minute. Even the hourly is chop. So I wouldn't play in oil either, Russell. Rally on AGNC, nice. We'll have to look at that. Really on AGNC. Oh yeah, it pays AGNC pays well, look at this, it's $9 right now and it pays 12 cents a month. And you go back through its history, it pays consistently every single month, even in these shitty down times. It pays consistently every month, and it's always 12 cents. That's 2023. Look at that. 2022. Even through COVID, 12 cents. Oh, this was 16 cents here. So we switched over. But yeah. And if it starts paying 16 cents when it's down, and that's There's 2000, there's 2018, consistently paying, because they're government-backed REITs. They're 20 cents there. Man, if you get up to 20 cents again with price, look at that, 65 cents. Eesh. Anyway, that's back in 2014. It's consistent. So 12 cents is not a great return, but it is when it's down here, when you're paying that kind of price, $9, 12 cents. That's $1.24, $1.44 per year. So $1.44, that's like so 14 bucks. That would be 10% at 14 bucks. So at $9, it's good. And you're inside this range here. There's upside premiums here at $10. So there's another 10% return on your money just up to there. So if it's paying you 15, 20% right now, 15, 16%, I think it is. And then a little run up to there, you get 25% if you let that sit for a year and it gets above 10 bucks. It's a good return on your money. Anyway, that's just, not that I'm telling you to buy it. You buy your own thing. I don't give out financial advice. I just tell you what I'm looking at. That's all. Nice. We'll have to look at that monthly dividend. Yep, very consistent. That's what I'm looking for. I may buy some shares soon. Yipper-doodle. Yeah, do some research on it. Look at that, right down, schmuck, right on the bottom of it. Holding. You want to see this run back up into this box here. That'll be box to box trading, internal range liquidity hunt. If you can get back up in there. So you do not want to see how that mean threshold is holding price? You don't want to see it drop below there now. That's got to go higher. Otherwise, it's gunning for the lows here. That's a strong dividend yield. Yes, it is. And because it's guaranteed, government-backed mortgages. It's government-backed. It's not like a bank. It's government-backed. So if they default on their mortgage, the government guarantees the loan. So the company can pay consistent dividends like that. And real estate, I'm expecting real estate to boom. Unfortunately, in the States, they're anti-immigration, so it's not getting a lot of lift right now. But if you're looking at an influx of refugees and property values wanting to go up, real estate's always been like a good long-term investment. So I like that for building new homes and stuff. And as new homes come out, people want to take out a mortgage. So anyway, 2026. Expect to see a little boom in the real estate market. That's just me. That's just me. I've been waiting on that for a long time though. I've been underwater for that for a while, but now I'm above it because I've benefited from all the dividends from it. Yeah, back in 2012, it was very high. The low is $6.12. You imagine making 12 cents on a $6 stock every month? That's 2% return on your money every month. So, and that's less any improvement. So if you're looking at $6.25 or $6, every 30 cents or every 60 cents is 2%, right? Yeah, it is. Anyway. Gold. So let's just review what happened here, Russell. So you got this, this is inside your head clean here. So here's where we break market structure to the upside, right? And now you want to see this stay open and keep going higher. So we come back down, and then it runs up into the rejection block. We were talking about that. Pay yourself there, because you may not get the run back up. If we get back through the consequent encroachment of this, which is the old high, you want to see it tap that fine sensitivity at that and go higher. It doesn't. It runs to the very bottom, closes it in. Remember, talked to you about the graded response, and as you get a graded response, so that's how it responds off of this low. So A plus setup, run, go. Excellent. A B is a come down and have an institutional order flow, leave it open. That's another awesome trade. And then a C level is right to the consequent encroachment of the BISI. And then this old high here, you want to see sensitivity. It doesn't. This is where you go, oh, it's a D level. I want to see a portion of this stay open. That's stronger for me if a portion stays open. It doesn't. It fully fills. So you start to go, ugh, now I don't like that idea at all. There's a small little tiny imbalance here. Stretch it out. You'll see it. See it right there? That is like a SIBI on the other side. If you close below it, you're on the wrong side of it. So when you trade back into it, bing, right there, that's the short. That's the one I've been calling. That's the theme of the day. When I was calling for that 232 in the 4-hour chart, reaching back for that old discount array. There you go. Reaches back for that old discount right here. You want to come back in there and go higher. It didn't. It ran through it. Come back. Give it a little kiss. That's precision for you right there at 443, which is like the 232 I was telling you about earlier in the NASDAQ. Right there, short. Aiming for this discount side here. You pop through it. You want to come back, find support at that. Right there, and run lower. There's your discount box down here. Like array to like array. Box to box. See that? Price imbalance, or sorry, volume imbalance to volume imbalance. It trades through it. It comes back into it and then trades through it on the wrong side of it. What did I tell you? When it trades through on the opposite side, you're going back the other way. So it trades through it. You go, okay, it's going back the other way. What as an upside objective I can reach for? Well, all you've got is this BISI here still. So it's bouncing around inside there. You've got a new one here. You trade below it here. You trade back up into it. Continue going lower. You trade through the discount one here. Trade back up into it. And then roll over and take the low. We're into the discount one now. So box to box in a larger range. You hit that. Upside. We don't have any, we just got a swing point here. So I look for this kind of stuff here. I want to see it get through this side and reach back into that premium array. And then you want to see that premium array either hold price and drop it lower or start climbing through it. Take out that little premium upside candle there, and then it's mean threshold happens to line up with the consequent encroachment of this BISI, and then you'd want to see that go higher. It doesn't. It hits the mean threshold of this candle, rolls over, drops down, takes out the low. So now you're stuck to in here and in here. I want to see this hold. It didn't. So you want to see the low get taken. As soon as that mean threshold gets traded through, you want to see the low get taken. It does. And now you're stuck into, I want to see this one here get taken to the upside. It does right here. Come back, found support at it right there. And now you want to see that go higher. I want to see that start to lift off. Not only has this been retapped, this candle here, after this volume imbalance or price imbalance has been traded through, you didn't get to come back and tap it. So you wait for this candle here to get taken. It does. So you want to see it one come back and tap that and go higher. It does. Now you want to see that keep going higher. The line in the sand is the mean threshold of this. So strength is hold and go. A little weaker is the open, and then the weakest part is the mean threshold. If you trade through that, look for the mean threshold of this candle and then the mean threshold of this one, because you're still inside this big ass range here right now. Does that make sense, Russell? Question D, on AGNC, I'm looking at the dividend info. It shows it pays a quarterly dividend as well. Is that true? Oh, I don't know. I don't know. I've just been expecting my dividends every month, and it pays me consistently my dividends every month. So if I get a bonus in there, that's great. Never mind, threw me off. I didn't know it did. It did a quarterly one, but so do you understand how all that kind of transpired if you're trying to stay on the horse, Russell? Oh yeah, they were much higher. When they're 36 bucks, you could get an amazing dividend. But imagine buying that low now, and then you get back up to half of what it used to be. Even if you get to 15 bucks, and the dividend increases from 12 cents to 20 cents, and you bought it at $9, then you're looking at a 20% dividend. That's pretty good. Anyway, that's why I'm holding it. It pays me. I like something that pays consistently every month, even in the bad times. So remember we said we wanted to see this hold price. It is. And now we're going higher. We're taking that out. Perfect. Pay yourself there. Move to break even if you have to inside this thing. So that's how you read that one. Anyway, hope you enjoyed that one. So let's just take this here and put that there so you can see why these are important. And I like this level there. It's not really, it's not a breaker, by the way, but it is a mitigation block. How we trade from this premium array. It's not a discount box, it's a premium. So it's the premium box. We trade up through the premium box, tap it, and go higher. And where we run up to? The next range high, which is this premium box up here. So if you're doing box-to-box trading, this is my box-to-box trading theory. Okay. If you really want to look at the last one there, you have to include that because it's all up candle. So let's include it. So if you're looking for break above, this is my range extension theory. So you have this. As soon as it trades through the premium box, comes back inside it, you want to see it run for the high. Pay yourself at the high, pay yourself at the high, and then aim for the next premium box, which is right there. So you would have got that literally in 3 minutes. No, 45 minutes, you would have nailed $1,000 trade all the way up into 500 here. So there's your premium. Then all of a sudden it reverses on you, comes back down to the order block, back inside our mitigation block again. And notice how the bodies line up with the mean threshold of that candle. And then we reverse, you come back inside it, push higher, look for the mean threshold. We traded through it, come back, tap it, run the high. Okay. Run the high, and then you were back on that mean threshold again. You hold, and then you run higher, and then you look for mean rejection block. Pay yourself at rejection block, and it continues to go higher, takes out that high, and you're up to the next premium array. You're through it, and now it runs higher into rejection block, right on the money, and then reverses on you. Anyway, yeah, it makes sense. 1 minute for maybe next target for gold inside that range. Nobody else has anything else they want me to look at? All right, that's going to be it for me. And there, look at that. that British pound broke through the highs we were looking for at lunch. It ran through them. Nicely done. Now we're looking for the next high right here. See how that has gone down? Notice how we haven't had much run in the, mind you, this is the daily. Let's have a look at the hourly on that one. Japanese yen's on a little tear as well. So we got our highs for the day. That was our target 3 hours ago. Our target was these highs, and we got them. Well done. I hope you guys enjoyed that trade. Gave you lots of kind of good trades today on that. Let's see what we got here. Okay, my next upside objective will be right there for silver. Yo ho, silver. That's silver's next upside stop. These also pay some crazy dividends. This one's 20%. Okay. So remember we looked at that. We went to see a hold price. Look at that. Wanted it to go higher, and higher it went. Anyway, if you like what we're doing today, hit the like button. Subscribe if you're a new subscriber. We're happy to have you. There's only 13 of you in here now, so everybody's lost interest. So I'm out of here. I will see you guys in the charts this afternoon. I'll be on Telegram there, or I'll talk to you again tomorrow morning. Until then, have an awesome afternoon, awesome day. I love you guys. Thanks for tuning in, and I appreciate every one of you. I really do, even those silent ones in the background who don't say anything. I appreciate you all. Thank you. Talk to you soon.